All right, we're ready to go. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. It is Thursday, May 19th, 2022. We have the indices right now being all over the place. At the moment, the S&P 500 is now down. It was green just before we went live. It's down around 11 points, good for 1/3% down. The Dow's now down 168 points. That was just barely in the green and then ended up making the turn down 0.5%. NASDAQ is down around, or I'm sorry, I stand corrected. It actually just bumped up to the green. It was down. It's actually been green for most of the day, but an extremely choppy day today. The NASDAQ is up 19 points, good for 0.2%. Then we have crude oil that's up 2% again. Everything's moving back up in that space. No shocker there, but it's at $111.85 on WTI crude. What's up, everybody? We got a jam-packed episode today. It's going to keep it nice and tight and short, though. But we have earnings to go over. We have Applied Materials and then Palo Alto Networks. I mean, the cybersecurity space has been all over the place as far as market volatility is concerned. But I put in the chat in the poll. Please feel free to check that out as to whether or not we think cybersecurity stocks are overvalued or undervalued. The multiples on most of these are sky high, but does that mean that it's still worth paying that premium because of what we're seeing economically, geopolitically, and growth? And all those questions we'll be answering today. Also, we have some headlines that we're going to be covering, but before we get into any of that, guys, as always, you know I'm going to cover the starting five. What's up, John Gaston, Bodie Beer, Jeff Panicka, Tracy H, and housekeeping? You guys are all our starting five. Hey, guys, if you missed the starting five, was that 5, 1, 2, 3, 4, 5? Yeah, okay, we're good. I had to, sometimes you just got to double check yourself. But if you guys missed the starting five, it could be because you're not subscribed or hitting that notification bell. So make sure you're doing that on the way in the door if you're new. If you're not, welcome back. And we're going to get started here. So just going to check in and see what some of the sentiment is on what you guys are talking about. It looks like Cameron Maddox is looking to go short on Palo Alto. They have earnings today after hours, and of course we'll be reacting to those. But he says that he's playing earnings puts on Palo Alto. We'll see. I mean, obviously the stock's been beaten down significantly, and we're in an environment right now where growth and demand for cybersecurity is so high. Palo Alto hasn't missed earnings. Let me see here. Back on September 9th, 2013, and they missed by a fraction of a cent. They went public in 2012. They've only missed one earnings report. Only missed one earnings. So you, my friend Cameron Maddox, have some balls on you to go short on Palo Alto. But hey, listen, as we always know, earnings don't always mean everything. If guidance comes in short, then Cameron might actually be making some money today, because that's usually how it reacts, right? Earnings can beat, and that's fine. But really, it comes down to guidance. What are they seeing in the future? What are we seeing in this current quarter? And I'm sure we'll hear all from that on Palo Alto. I'll be covering that in just a moment. Before we get into anything else, though, before we get into anything else, I kind of wanted to talk about what was been going on in the market today, why we're seeing such volatility. It really kind of comes down to everything else that we've been seeing revolving around the Fed, inflation, and what have you. I think investors are really just kind of digesting what's been going on this entire week. Obviously, yesterday, we just got a big-ass bloodbath, and a lot of it was a result of Walmart and Target, I think, was the major influence there. I think it's safe to say. Target came in and actually missed the boat even more so than Walmart did. And, obviously, increased costs because of fuel and shipping and all of that certainly played a role. I mean, the operating margins have really been slashed nearly in half on Target's part. But a lot of that, I think, also, and you guys heard me talk about this, had to do with misallocation of inventory between discretionary and non-discretionary. And my theory, or I guess my theory or my hunch is started to be supported a little bit. And how it's been supported has been through BJ's. Now, BJ's reported earnings today, and they went off. They got dragged down yesterday with an anticipation that those earnings were going to be just as bad as Walmart and Target's. Guess what? They weren't. very interesting notes from BJ's. I thought, if you guys aren't familiar with BJ's Wholesale, they're very similar to a Costco, Sam's Club, which is part of Walmart. Obviously, this is your daily chart. And here's the 5-minute here, but they beat earnings, and they did really well at beating earnings, by the way. And then they reaffirmed their guidance too, and cited that they see strong consumer demand. Now, how is it that BJ's absolutely crushed it and Walmart and Target still ended up shitting the bed? In my opinion, I think this has a lot to do with correct allocation and not over hiring and not having too much staff on hand. So to me, there's a very interesting tale of two stories here. And I think a lot of it, this is kind of an unpopular opinion. I think a lot of it has to do with execution. Did BJ's execute better than Walmart and Target? I think that there's a case to be made for that. Now, Costco has earnings that are going to be coming up in June, and we're going to hear from them and how they've been moving as well. But listen, guys, I mean, the stock's it was up as much as 10% today. It's now still hanging in there, up around 7.5%. But to me, if you ask BJ's management, they're like, hey, we're feeling pretty good about the market right now. We're feeling pretty good about the consumer. We're not going to change a damn thing about our guidance. And in fact, we're going to continue to say we still see that guidance is going to stay put, and we're not going to change a thing. We're not worried about it one bit. It's very interesting to see how this dynamic has been playing out between stores that are in the same industry. So who knows? All right. So, and this was one other thing that I actually wanted to address. Shock City Rocker actually brought up, did anyone notice how SoFi has been holding up pretty well, even when growth is getting hit? And I'm so glad you brought that up, because I was going to bring that up in today's show as well. SoFi has been a Chaos Crew favorite. If you guys aren't familiar with the Chaos Crew, or you aren't a part of the crew, make sure you hit that join button next to subscribe, or there is a link in the chat as well if you don't find that join button. But each and every morning I put out a list of stocks that I think are worth watching. 5 stocks in total. I give a fundamental and technical breakdown on each, and they come out before the market opens, so you have a nice little direction as to where to look and what I have my eyes on for the day. If you guys are interested in that, want to continue to support the channel, I would certainly appreciate it if you hit that join button next to subscribe, or that link in the description. And I would love to have your support and love to have you as a part of the crew. There's a lot of people that have bulls and bears next to their name in the chat. You can see them. They're all part of a fantastic community that is the Chaos Crew. All right, so here's SoFi. It's up another 7% today. And ever since their earnings, they have done extremely well. In a sea of red yesterday, SoFi was up 2%. Now, you can make the argument that it's just gotten beaten down so much. Here's your daily chart. But listen to this. SoFi hasn't traded above the 50-day moving average since November. And we saw 2 times where it tested it back in January, and then again in the beginning of March. We're back here again, and it could very easily close over the 50-day moving average, or right at the 50-day moving average. And I think that this is very important, and this shouldn't go unnoticed. It seems to me that perhaps investors are starting to warm up to the idea, especially since those earnings from SoFi, that it's not just about student loans for them. Yeah, of course, it's going to be impactful. But the growth story here for SoFi is extraordinary. And look, in an environment that we're in right now, where you have a company that's reporting losses, nobody typically wants anything to do with it. And, fintech has just gotten absolutely hammered. But at some point, we knew that there was going to be some sort of turnaround. I think that we could have potentially started to see that once SoFi came out with those earnings. If you guys recall, the earnings that they reported weren't bad at all. They actually came in and beat earnings, and the outlook was pretty darn good, despite some of the issues with the student loan moratorium. If you remove that, now granted, some might argue, well, you can't remove it. It's still part of the company. Understood. But they're working to make themselves more about growth and all kinds of other areas, and they're building a moat around what is the student loan debacle. So that's not in their control, and they're doing a lot of things that are in their control. And you look at the personal loans and mortgages, and now they have that bank charter. I think that SoFi is an absolute steal down here, and I think, in my opinion, we're going to be looking at this and thinking to ourselves, man, I wish I would have gotten in at $7. Granted, I told you guys earlier this week that I am in it, and I'm of course red on it. I didn't get in as late as everybody else did. I'm in it around $10, but I think that patience is going to pay off here for SoFi, and it is undervalued. Speaking of overvalued or undervalued, if you guys want to put in the chat over under towards the end of the show, as you know, I always go over some of your favorite tickers and determine whether or not I think they're overvalued or undervalued. If you guys want to participate in that and check and get my thoughts as to whether or not I think your favorite stock is overvalued or undervalued, make sure you're putting over under in the chat with your favorite ticker next to that over under text, so that I can see it and identify it and know exactly where to look when I go to pick it. And your stock might just show up at the end of today's show. So make sure you're doing that. So yeah, there's SoFi. Another interesting one, and this has been a Chaos Crew favorite, which again, if you guys want to be a part of what it is that we're doing, then click that join button or check the link in the chat to become part of the Chaos Crew. But this is Drive Shack. And if you notice, it's obviously gotten beaten down too. This is another stock that is speculative in nature. It's one that everybody wants to tell you to avoid. The very textbook type of stock that everybody wants to tell you to avoid. And I'm not going to say that you should load up on this and have it take up a significant amount of your portfolio. But I think there's some interesting things going around here with Drive Shack. There's a ton of volume coming in here, and ever since their earnings as well, it's been doing extremely well. It went up nearly 60-70% from the dollar that it was at just after their earnings, and it hit around $1.76. It's trading at $1.51 now. It's down just a couple percentage points, but the volume has been insane, and we've seen a couple of Form 4s come out of insider buying. Several $1 million worth of Drive Shack. If you guys aren't familiar with Drive Shack, it's basically a competitor to a Topgolf. Their growth is significant. They have a couple of competitive edges. One of them, or competitive advantages, one of them is that they have a puttery. Think Topgolf, but with putting. And it's a little bit more of an adult putting, right? Like you get to carry drinks around with you, what have you, in these putteries, and that's how they're building this out. It has the backing of the likes of Rory McIlroy. He is an investor of the company as well, has that endorsement. So, obviously very speculative in nature. I've been in Drive Shack for over a year now, but I still see the long-term potential here. There is no other competition for Topgolf, and I think that Drive Shack certainly has the ability to kind of move in and take up some market share in that space. I mean, we know how crazy Topgolf is. You just saw Callaway's earnings last time around and how crazy that was. So I think that that Drive Shack, like I said, long term, I'm not saying that you should buy this up and expect a big move tomorrow, but there's something brewing here with all the insider buying that's been going on post earnings, might I add. So take a look at it, see if you like it. If you don't, no big deal. But, I always try to point out some interesting things that I think are just moving in the market underneath all the drama and all the crazy headlines. So those are your two. I mean, not to say that SoFi is under anybody's radar, but it's certainly noteworthy to see that moving so nicely, especially since the market's been ridiculously volatile. Okay. So yes, Snookeroo, John Deere is tomorrow. So since Thursday is the last day of the week that I do my daily streams, I figured we have John Deere tomorrow and Footlocker. So I'll just give you my outlook on what I think John Deere and Footlocker are going to be doing tomorrow and what to expect if you guys are interested in those. So I'll definitely be covering those later in the show once we react to those earnings. Right now, we have the close coming up in about 30 seconds or so. So I wanted to kind of see how you guys are feeling. We'll go ahead and pull up some of these stocks and give you the expectations here. So Applied Materials, one of the stocks that are going to be reporting today after hours. And then we also have Palo Alto. Palo Alto, cybersecurity stock. Oops. I'm typing in the whole thing. Palo Alto, PANW is the ticker symbol there, has had a significant drop off. Was trading at $640.90 was the all-time high just back in April of this year, and it has taken an absolute beating. The stock is trading at 59 times. We'll call it 60 times next year's earnings. You look at something like a CrowdStrike, and it's right around, I believe CrowdStrike's actually more than that. A lot of these stocks in this space have significantly high multiples. Yeah, CrowdStrike is at 130 times. So, you look at those on the surface and you think to yourself, holy shit, like I don't want anything to do with this. Nobody wants anything to do with these highly volatile, high multiple stocks right now. But they're in a little bit different of a category of their own. Consider the situation that we're in, especially geopolitically, with Russia-Ukraine situation going on. We've had multiple reports of Russian hacks within small business and medium businesses, as well as, bigger corporations and even the government. So, the demand here for cybersecurity is absolutely insane. And I think that we could see some positive news, despite what Cameron, his strategy is on Palo Alto. I think we could see some positive news from them. Their estimated earnings per share is $1.68. $1.4 billion is the estimated revenue here as well. Last quarter, they came in at $1.65. Oh, no, sorry. The estimated was $1.65. They came in at $1.74. And then they beat by nearly a dime. $1.3 billion was the revenue there. As I mentioned earlier in the show, last time they missed earnings was September 9th, 2013. So I think it's a pretty safe bet that Palo Alto comes in here and at least beats earnings. We'll have to see how they do on guidance. But since going public in 2012, they've only missed one earnings report, and that was in 2013. The last 5 years, Palo Alto saw its revenue grow at 21% per year, and I think that we could see something similar here as well and provide top line next generation firewalls. If you guys aren't familiar with exactly what they do, as far as cybersecurity is concerned. So there you have it with Palo Alto. Then there is Applied Materials. AMAT is the ticker there. And that stock looks like it's already reacting. It's down 4%. Let me just go over the expectations here first, and I'll go ahead and try to pull up those earnings, as it looks as though they might be out now. Applied Materials, their estimated earnings per share was $1.90, $6.4 billion. Last time they came in and beat earnings by 3 whole cents. 186 was the expectation. They beat by 3 cents at 189. Came in at 6.3 billion. The last time they missed was just November of last year of 2021. So this will be an interesting one. Obviously, it looks as if those earnings might be out. So let me go ahead and take a look to see if I can find those for you. Stock right now is continuing to fall. It's down 5% after hours, after already closing the day down around 0.5%. So let's go ahead and check out what those earnings might look like. It looks as if those might be out. So as soon as I have something, I'll be happy to share that with you. So it looks as if they missed expectations. So Applied Materials, as I had mentioned before, expectations was $1.90. They came in at 185, so missed by a nickel. So 185 was the actual earnings per share, missing expectations of $1.90. Revenue of $6.25 billion, missing those expectations of around 6.35. So a miss on both earnings per share and on revenue. They also, it looks like they guided down as well, around 6 to 7%. So they guided down on the year. So lowered their guidance. So literally everything that you could expect to go wrong looks like did go wrong as far as earnings are concerned for Applied Materials, if you're an Applied Materials shareholder. Now, this was interesting. The stock right now is trading down 6%. You look at the daily chart, and this to me has been one to certainly take a look at. You see that it's been trading before this breakout, and most of 21, it was trading in a sideways channel here, all the way up here, and then towards the last couple of months, it's really kind of been falling off. And rightfully so. I mean, most of the other semiconductors have not been doing well either as far as stock performance, but most of the semiconductors have had pretty decent earnings. So it's a little bit surprising to see that Applied Materials comes in and misses pretty badly and then doesn't give good guidance either. If you look back at AMD's earnings, for example, now I know, apples, oranges, right? AMD's, they did really well and then upped their guidance as well. Saw really strong demand there, but even like a Qualcomm, some of the smaller ones also did well too. And you look at Applied Materials, and it's trading at 13 times next year's earnings. It's going to be trading lower than that now at the open tomorrow, presumably. But that's actually really surprising. Applied Materials did not do well on those earnings and missed pretty significantly on earnings per share as well as revenue. So if you guys are just tuning in, they came in and missed on earnings per share at $1.85 versus a 190 Revenue came in at 6.25 billion versus the 6.35 estimate. Guidance came in and also missed and actually ended up lowering their guidance 1.59 to 1.95 for Q2 or Q3 rather versus the estimated $2.04. Q3 revenue also 6.25 billion versus the 6.73 billion that was expected. So really tough miss for Applied Materials, unfortunately for them. At least, well, hey, at least you got puts on AMAT, Cameron. Good on you. So we also have a couple of other ones that looks like they might be moving. ROST, Ross, the retailer. You guys aren't familiar with Ross. That's what they do. Similar to like a Kohl's or a Gap there, thereabouts, or Marshalls or something like that. TJX would be the ticker there. That stock is now down 15%. It was already just closed slightly in the red on the day, but the stock's plummeting right now. Let me see if I can pull those earnings up for you as well. I don't have the expectation. That wasn't one that I was really kind of having my eye on, but I saw that it was listed, so I figured why not. But let's go ahead and take a look at ROST to see what those earnings are. And okay. Looks like their guidance is below estimates as well. 99 cents to $1.07 was actual. The expected was $1.33 for guidance. Don't have earnings per share just yet. That was just one of the numbers I saw. So let's see here. Looks as if earnings per share, GAAP earnings per share is at 97 cents. Revenue came in at 4.33 million. Is that right? Let me just double check that for you guys. Okay. So the expectation was 96 cents and 4.53 billion. So somebody must have made a typo. I was like 4.53 million seems really small for Ross, but 96 cents was the estimated, and then 4.53 was the estimated revenue. And it looks as if they came in at 4.33 on revenue and actually missed on that too. So they saw a decrease of 4 to 6% for 13 weeks ending in July 2022. So another miss there, and it looks like that this is accurate. The guidance was 99 cents to $1.07 earnings per share for Q3 versus a $1.39 estimate. So really big miss for Ross as well. I don't know how many of you guys actually care or invested in Ross, but there you have it with that one. Pretty decent miss there. Palo Alto, let's take a look at that one. The big one here. Stock's up. Sorry about your puts, Cameron. Stock's up 9%. Sorry about your puts there, bruh. Okay. Stock is absolutely on fire right now. It's up 9%. Let's take a look at that. Righty. They all came out right after the open, which is nice. Palo Alto revenue at 1.4 billion versus the 1.36 billion expected. $1.79 versus $1.67 was the expectation. So it looks like they beat pretty handily. Obviously, as we all know, guidance is going to be the big driver here. It looks as if maybe that guidance is pretty darn good. Now the stock's up 10% after hours. Pretty decent beat there. So again, revenue came in at $1.4 billion versus the $1.36 billion expected. Earnings per share 1.79 versus the 1.67 expected there. Man, what an absolute rip on Palo Alto. It's still got a long ways to go to get back to where it was, right? I mean, obviously 640, I don't see that happening anytime soon. But this is certainly a move in the right direction. It bottomed out here, 52-week low at 421.55 today. I believe that was a 52-week low. Nope, not quite. Almost a 52-week low for Palo Alto, but certainly the low for the year. 421.55 was today, the print and intraday low. But up another 10% here today so far. Obviously, it's early. Earnings just got released, so who knows what else is in there. And then as they come in, I'll certainly share those with you. But so far, pretty solid beat, it looks like, preliminarily on those earnings and on revenue. I mean, pretty decent beat there. Guidance for Palo Alto looks like 226 to 229 per share versus the estimated 222. So that is a beat on guidance as well. That's for the fiscal year Q4. Revenue is expected to be around 1.53 to 1.55 billion versus the estimated 1.53. So on the upper end of that guidance expected revenue as far as guidance is concerned there. Fiscal year 2022 revenue in the range of 5.48 billion to 55, representing year-over-year growth of around 29%. That's the world we're living in, guys. And that is what I was talking about earlier. And kind of going back to the poll that I put up in today's stream. If you guys didn't catch that, make sure you're voting in there. Certainly would appreciate that. There's 88 votes in here. And most of you, it looks like you're kind of in line with me. 60% say that cybersecurity stocks in general are undervalued versus overvalued. And this is why. I mean, there's a premium here for Palo Alto and for CrowdStrike. And yeah, the multiples are sky high. But Palo Alto, as I mentioned before, went public in 2012 and now has just reported, a guidance of 29% year-over-year growth. That is worth paying a premium for. That's why there's a multiple on this stock. And when you look at, just how much this is moving and the demand here, it's probably going to continue to go up. The growth is going to continue here too. You have multiple reports, and we've been seeing this over the last couple of years now, really since the beginning of the pandemic, that the need and demand for cybersecurity has gone absolutely insane. Before Russia and Ukraine, Russia was still, pulling a bunch of crazy shit when it came to hacking, not just the US, but everywhere, businesses, right? Governments. And it's been a huge problem, and it's ever evolving as well. Palo Alto certainly plays a huge role in that. They're probably one of the best cybersecurity companies to invest in next to CrowdStrike. These are my top two, in my opinion. Okta is also up there if you guys want to check that one out. But, while there is a high multiple on these stocks, they continue to come in and prove themselves each and every earnings to let you guys know, hey, we're not going anywhere anytime soon. And Palo Alto just showed that to you today. So pretty decent beat on that one. Again, the stock's still going up, not really giving up any gains right now here after hours, and it's up around 10.5%. Let me know how many of you guys actually went long on Palo Alto here today, and if you're feeling pretty good about your holding here. What a move. What a move on Palo Alto here so far. Really great earnings report from them. Okay, so, hey, what's up, Claudia? Good to see you. One of our Chaos Crew members, longtime member there. Appreciate seeing you. Lots of people feeling really, really negative on John Deere tomorrow. We'll talk about Deere in just a second. But yeah, if you guys are just tuning in, we just reported on Palo Alto. They came in and absolutely smashed earnings, and then also came in with guidance above what the expectation was there. So really, really strong beat for the cybersecurity company. I would imagine. Let's take a look at some of the other ones to see if there's any kind of reaction here. CrowdStrike. Let's see if there's any kind of sympathy movement here for CrowdStrike. Yep, looks like that's actually the case. CrowdStrike was actually up 3% today. Up another 3% in after hours, presumably because of how well Palo Alto just reported those earnings. Let's take a look at a couple other ones. Okta, also not much there, but it's up around 0.5%. Doesn't look like it gets much movement and after hours anyway, or pre-market, but stock was up 5.5% today too. So pretty decent move on a lot of those. Zscaler is what is that? Yeah, ZS, that's the one. Zscaler also, that's up 3.5% as a result of Palo Alto's earnings. I would imagine these are all going to move here. If they're not moving in after hours, they're probably going to move tomorrow, because I mean, that is, oh gosh, what an absolute fire quarter for Palo Alto, man. Pretty decent quarter for them. All right. If you guys are just tuning in, wanted to take a look at some of the other ones. Applied Materials came in, really shit the bed on earnings, missed on guidance, missed on revenue, missed everywhere. Stock's down around 4% now. And one of the few semiconductors that came in and didn't really do well on earnings. That's unfortunate for them. So Don't know what to say there about Applied Materials. I'm actually a little bit surprised. I thought they would do better than that. I'm not surprised that they missed earnings, but the fact that they missed earnings and then kind of lowered their guidance expectations as well is a little bit surprising. I would imagine they're probably going to cite supply chain problems and all of that. But, just given the demand here for materials and rare earth materials in general, I would imagine that they have the pricing power here. So we'll have to see what they say on their conference call. I'm not quite sure what's going on there. Malta Goya says my buddy works for Palo Alto, always gives me a hard time because I invest in Crowdstrike and Okta, but not in Palo Alto. That's funny. I mean, honestly, I don't think you could go wrong with either one of those. If you're sitting in one of them, I think you'll be fine. Okay. So, oh, wow. Well, Will Thompson says, I work for a dealership. So we'll just get on to some of the earnings that we're going to be expecting for tomorrow. So Deere company actually reports tomorrow, as well as Footlocker. Will Thompson, I guess, is talking that he works for a John Deere dealership. Says we have 2 lawnmowers and 1 tractor for sale and not looking good till around October. If you work for the dealer, Will Thompson, I'd be curious to hear about what the services side of things is how that's going for you. Because it's not all about selling tractors, right? The services is really kind of where they make their money. So it will be interesting to see if you guys are looking at John Deere. I mean, a lot of you guys were pretty negative on this. So let's go ahead and just get into it. Stock has some pretty decent moves, and it is a little bit high as far as multiple is concerned. It's at 16 times next year's earnings. When you look at some of the other ones, I guess maybe it's probably in line. I wouldn't say it's overvalued or undervalued. I'd say it's valued just right, trading at 16 times next year's earnings. They have earnings tomorrow, and it'll be one to watch for sure. Their estimated earnings per share is at $6.71 per share. $13.1 billion is expected in revenue. Last time around, they came in at $2.71. Or sorry, the expectation was $2.27. $2.92 was what they actually came in at, beating by 65 cents. Revenue came in at $8.5 billion. So this is definitely interesting to see that the expectation here is much greater than it was for last quarter. And, with $8.5 billion in revenue versus 13.1, obviously this is a cyclical stock, right? As we get it closer into the summer months and as the weather starts to warm up, more and more people are trying to get their lawnmowers and tractors and farming equipment up to speed. So it stands reason to believe that you can expect a little bit of an increase in revenue than from, some of the winter months or that last quarter. But that's still a significant expectation, I think. And it is on the high side. So I see where a lot of you guys are coming from. That being said, I think that there's still a lot to like here. Again, trading at a pretty low multiple, and it's profitable. The stock's not going anywhere. Demand in agriculture is absolutely insane right now, especially in the U.S. because of what's going on abroad. We talked about wheat over Stock Watch Sunday and how crazy that's been. So demand for, just agriculture in general, I think it's going to be sky high. And the Deere company has pricing power here as well. This is, to me, in my opinion, a good stock to be in when fighting inflation. This is a good inflation stock. So, we'll see. My expectations here is that they'll actually beat those numbers despite the lofty expectation. But we'll have to see. I mean, I'm not going to sit here and say that I'm going to be absolutely right on this, but I have a good feeling about John Deere. Last time they came in and crushed it, stock did extremely well. It's pulled back significantly. It's down 17% from its highs. And so I'm not saying that you should buy it before earnings or buy it before the earnings come out tomorrow or try to get it here after hours, but keep an eye on it, see where it goes. Regardless, I think it's a good long-term stock to hang on to as well. All right. Footlocker also reports tomorrow, and they are going to be one to watch too. They just had their revenue or their earnings expectations actually raised, which I thought was very interesting. Lots of times when you see that, it means that investors are expecting something pretty good from Footlocker. Their estimated earnings per share is $1.52. I believe just before this week, it was around $1.59. $2.2 billion in revenue is the expectation there. Last time around, they actually crushed earnings too. $1.67 is what they came in at with $1.44 expected. They also came in at $2.3 billion in revenue. So bar's been set a little bit lower than what the actual earnings were last quarter. Makes sense, right? Last quarter, you had the holiday season in there too. So there is that factor. So a little bit lower expectations, but actually they ended up raising them from what they actually were. So I think that when you see that, sometimes the investors are expecting a pretty decent quarter from something like Footlocker. So last miss was in May of 2020. They missed pretty badly. It was a loss of 14 cents. Obviously, it makes sense, right? I mean, we're in the middle of a pandemic. Nobody was out there buying shoes when you're all stuck at home. So that was the last time the Footlocker actually missed. We'll, of course, see the guidance. And this is going to be one that to certainly watch for. I know that Footlocker is probably not on everybody's radar, but given the fact that we're seeing such mixed results, right? When you look at Target and Walmart, and we saw an increase in non-discretionary sales, right? The consumer is very strong in that area. Shoes are non-discretionary. So I think that there's certainly a big reason to be bullish on Footlocker tomorrow, especially if you guys are in it. And I think that they could do well. Obviously, the caveat to this is inflation. They've had to pay their workers. They've had to pay, to have products shipped to them, and all that costs a lot more money these days. So could they overcome some of those costs and price up their shoes and apparel to pass that on to the customer? Walmart and Target were unable to do that. However, Home Depot, Lowe's, and as we learned this morning, BJ's they were able to shift and pivot that properly and be able to pass those costs on to the customer, no problem. And they actually still see strength there. Could Footlocker come in line with something like a BJ's, or is it going to fall on its face like Target? Your guess is as good as mine. Although I have a pretty good feeling about Footlocker in that regard. All right. So Claudia says, I'm a bit surprised Footlocker still exists. I mean, yeah, $2.2 billion for the quarter. I'd say they exist for sure. Let's check back in with some of the other earnings that we reacted to. And while I'm doing that, make sure that you're putting the over-under segment, over-under stocks in there. If you guys are curious about whether or not I think that your favorite stocks are overvalued or undervalued, make sure you put over-under in the chat. Palo Alto is still screaming up here. It's up over 11.5% on a monster beat on earnings. They beat on earnings per share. They beat on revenue, raised their guidance. Their growth here on revenue is at 29% year over year. Lots to like about Palo Alto here. If you're an investor, if you're a holder of Palo Alto, you should be very, very happy about those earnings. A lot of the other cybersecurity stocks are reacting as a result. So pretty decent move there from them. Applied Materials came in, absolutely shit the bed. And everything that Palo Alto did right with their earnings, Applied Materials did wrong. They missed on earnings. They missed on revenue, lower guidance as well, below expectations. And so as a result, the stock's down 5%. Honestly, not as bad as you would think, especially given how they missed those earnings. But there's your results there. Ross, if you guys are interested in this one as well, really made a terrible earnings report here. Missed badly on just about everything. Earnings per share, revenue, and guidance as well. Stock's down 18% after hours, and still looks like it wants more here. So those are your big earnings today. We just covered what the expectations for John Deere and Footlocker are tomorrow. So if you guys want to check that out, make sure you're going back and watching that. But let's go ahead and get into over under. So as you guys know, towards the end of the show, we go over your favorite stocks and whether or not I think they're overvalued or undervalued. There was one that I thought was really funny. Over under on the Fed policy. Is Fed policy overvalued or undervalued? All I know is that it's over talked about. It's overplayed. Talking about Fed policy to me right now is just like listening to Don't Stop Believing or Friends in Low Places. You guys ever go to like a karaoke bar and like that's all you ever hear? Don't Stop Believing is the most overplayed song in history, period. And that's exactly how I feel about the Fed policy right now. It's overvalued. Okay, so over under on Palantir. Very interesting one indeed. We haven't talked about Palantir in a while. Palantir right now was up 3.75% today. We take a look at the daily chart right now, and it is just been absolutely abysmal. Came down to lows of 644 after their earnings that they did not do well on, and the stock is still diluting too. By the way, this has about actually this has more than double the float or outstanding shares rather than like a SoFi, for example. This is trading at 49 times next year's earnings still. I know it's hard to believe, and I still love the company, and I think they're going to do great things. It's a great long-term hold, but for the here and now, it's overvalued. It just is. It's overvalued. Just fundamentally looking at the stock, looking at that forward multiple, and looking at the amount of shares that they're still diluting. They're still paying their employees a shit ton in stock. I just don't see how this goes anywhere anytime soon, unless something crazy happens. So for now, it's overvalued, although I still like it long term. So I actually own it. So that just goes to show you how I really feel about it. I mean, I'm a owner of Palantir as well. So don't get me wrong. It's not poo-pooing on your parade. It's just, you have to be real, even if you are a shareholder of it. But I think Palo Alto, or keep saying Palo Alto, Palantir is overvalued still for right now. I can't find it, but I know somebody had put in there Alcoa. Alcoa, over under on Alcoa. So right now, Alcoa is trading at 5 times next year's earnings, nice and cheap, right? Just closed over the 200-day moving average. If you're not familiar with Alcoa, it's an aluminum play, aluminum company. And obviously there's been shortages here, and that's why we saw a move up when Ukraine and Russia started to get into their war. There was a huge move on aluminum, and things have pulled back. I still think that, in my opinion, that there's going to be a strong demand here, and that shortages are going to persist with aluminum. Therefore, with a 5 times next year's earnings multiple and a closing above the 200-day moving average today, actually did it a couple days ago, I would say, Darren Anderson, that Alcoa is undervalued. So there you have it for Alcoa. And then let's see here. Just bought 500 shares of Tattooed Chef, says Nukaru. I will pray for you, sir. I don't know why you would do that. You might as well just wipe your ass with that cash. Love you, buddy. Over under on Coinbase. Have we done coin? I don't know if we have. So had a pretty decent day. It was up 7%. This is still trading. Actually, I'm sorry. That's right. They came in a loss this past quarter. What can I say about Coinbase right now? The market cap is at $15 billion. I still think it's overvalued. As crazy as that is to say, you have crypto right now. It's a very volatile market. Trading activity is extremely low, and you saw that last time around. Yeah, it got punished as a result, but I still think there's more punishment to come. So therefore, in my opinion, I do think that is undervalued. I think you'll just be able to get Coinbase cheaper. I know that it's come down a shit ton from nearly $400 a share, and it's closing here at 67. Pretty decent bounce from $41 that we just saw about a week ago. But I think there's a lot more volatility here for Coinbase. It'll be back, right? Like if you have a long time horizon on this, 5-10 years, you're going to love it down here at 67. In the short term, though, for right now, I don't like it. I don't like it for the rest of 2022. So we'll see. But I think it is. I think it's overvalued still, unfortunately. All right, guys, that's going to do it for today's show. I know it's a little bit more of a shorter one, but I'll be back here on Sunday for Stock Watch Sunday at 7:30 p.m. Eastern time. I would love to have you guys there. So if you guys want to hang out and get my outlook on the overall week and what to expect for the week ahead, make sure you tune in at 7:30 p.m. Eastern time and hit that subscribe button, hit that notification bell to get notified when I actually do go live, because we all know that you'll forget to tune in. And on your way out the door, make sure you hit that thumbs up. Also, if you're not a part of the Chaos Crew, make sure you're hitting that join button next to subscribe, or there is a link in the chat as well. Would love to have you guys as a part of the crew. In return, you get a watch list from me, 5 stocks I put out before the market opens every single day, a nice fundamental and technical breakdown on each one of those. Plus, you get access to Discord and all kinds of other good stuff, guys. for $4.99 a month. You just can't beat it. I'm talking $4.99. It's $5. It's almost the price of gas right now. You can't beat it. So, and it pays for itself. And ask anybody here in the chat. And it's a great community to be part of. Would love to have you guys there and love just have your support here on the channel. So that's going to do it for me, guys. Enjoy your weekend. And I'm sure I'll be praying for you, John Deere and Footlocker holders. Good luck tomorrow. See ya.